One of the most expected earnings during this season was Alibaba earnings, and today they smashed earnings with missed analyst expectations. Hello everyone, welcome back to the channel. Today we will talk about Alibaba, their earnings, stock performance, Chinese companies, my thoughts on everything and more. If you're new to my channel, please consider subscribing and smashing that like button since it really helps the channel out. Alibaba stock is currently trading at $209 per share. It is already down 1.84% pre-market hours after being up 2.50% yesterday. We all have seen how Chinese stocks have been getting affected since last year, and that is why Alibaba is down 22.43% in the past year. Not only because they got affected with something that they did, but also because other Chinese companies have been getting targeted for different reasons. And that is why when we invest in Chinese companies, we gotta understand that extra risk that comes with Chinese companies, as if one gets affected by anything or by the government, all of the other Chinese stocks will most likely drop, because no one likes to see how their government or China government or regulators are able to do whatever they want with their companies. I do have to say that I don't believe that the Chinese government will affect Alibaba, as it is such a big company for their economy. But we never know, and we saw what has been happening with Jack Ma, Alibaba's founder. As this article says, since standing down from the board of Alibaba in October last year, Ma has all but disappeared from public view, with much speculation as to his well-being and what involvement the Chinese authorities may be playing in his absence. That's related to a speech he gave on October 24th, in which he criticized the authorities for, among other things, the banking rules and their interference with businesses. There were rumors that he might have been placed under house arrest, and some even questioned if he was still alive, which, to be honest, it sounds crazy, more like a movie scenes, but these things happens. Those kind of things happen in countries where the government do whatever they want, just like in my home country, Venezuela. The point here is that obviously some people prefer not to invest in Chinese companies and don't have that kind of risk in their portfolio, which obviously makes it harder for Chinese stock to rise like US stock. But let's check Alibaba's earnings report. First of all, their revenue was $31.8 billion, missing analyst expectations as they were expecting $32.5 billion. Still, they saw an increase of 34% year over year. The shortfall came as the Chinese government launched sweeping regulatory crackdowns on the country's tech industry in recent months, including a $2.8 billion fine slapped on Alibaba's in April. Annual active consumer of the Alibaba ecosystem across the world reached approximately 1.18 billion for the 12 months ended June 30th, an increase of 45 million from the 12 months ended on March. They saw a decrease of 11% in income from operations. We can see that from their commerce business. Their China commerce retail grew 34% year over year, which represents 66% of the revenue, which obviously they ended to continue seeing such a growth in that side of the business, which is important to continue seeing. Then the China commerce wholesale only grew 13%, but their international commerce retail grew 54% to $1.6 billion, which represents 5% of their revenue. Their international wholesale grew 37%. Caniao Logistics, which, as the name says it, is their logistics service business, grew a whopping 50%, local consumer services 23%, and others 42%. But their other side of the business, such as cloud computing, grew 29%, which is nothing like the 51% for Microsoft Azure or 37% for AWS from Amazon, but still is a nice growth, as their revenue from this business is not that much money yet. Checking their financials more in depth, we can see that certainly they reported $31.8 billion. Make sure to see this column at the right, as these two other columns are in yuan, and we can get confused really quickly. Anyways, their cost of revenue did increase year over year to 60%, all the way up from 55% last year. Not the best cost of revenue, but we saw that kind of same thing with Amazon. Here we can see the 11% decrease in income from operations that they mentioned at the beginning, as their cost of revenue and expenses increased more than what their revenue increased. Finally, reported a net income of $6.6 billion, which decreased as well from 46 billion yuan to 42 billion yuan year over year, after seeing a nice 34% growth. I do have to say that their balance sheet is pretty healthy and nice, as they have $45 billion and $27 billion in cash and cash equivalents and short-term investments respectively, with total assets of $265.6 billion and total liabilities of only $92 billion. They also have a nice current ratio of 1.75. I know that we have seen better current ratios out there, but remember that anything about 1.2 is excellent for me and very healthy for the company in my opinion. Now, the company announced that they will increase their buybacks or share repurchase program from $10 billion to $15 billion, the largest share repurchase program in the company's history, because we are confident of our long-term growth prospects, which makes kind of sense since the stock is at $193 right now, 3.45% down since the market opened, with a market cap of $525 billion, with a forward PE of 16.77 and a price to sales ratio of 0.76. 0.76. That is a very, very appealing price to sales ratio. The stock is cheap at these prices and even more if it continues dropping, which is why many believe it is really undervalued. Analysts are expecting this stock to go up on average 47% in the next 12 months, but on a very, very bullish note, to go up 81% in the next 12 months, while others say that the stock is 27.4% undervalued. So buying back their shares at current prices is a good decision in my opinion. Obviously, that could also help boost their share price, but it's okay in my opinion. Apple does that a lot. I do understand that just because it is a Chinese company and all the controversy around Chinese companies might be difficult for Alibaba stock to see a run fast as any kind of news against not only their company, but any Chinese company will affect their share price. And it will make many sell or simply not invest in Chinese companies. This does not only happen with Alibaba, it also affects Neo, Tencent, and many more Chinese companies. I do have to say that we all know that Alibaba serves about 80% of the Chinese e-commerce market, basically dominating the world's largest e-commerce market. They are also trying to strengthen their position outside of China, just like they just announced or launched a low-profile website with an American name, 11main.com, which is a platform for smaller sellers to hawk their wares. I currently do not own Alibaba stock. I used to. I bought back in February 2019, but later on I decided to sell because of everything that has been happening forever with Chinese companies. I prefer to invest in other companies, e-commerce companies such as Amazon, for example, or Wish, as people call Alibaba the Amazon of China. If we compare their stock performance with other of the e-commerce stocks, Alibaba is up 20% in the past 2 years, while eBay is up 67%, Amazon 81%, and Shopify 363%. Even since March 2020, which is where we saw a huge acceleration in the e-commerce industry, Shopify is up 341%, eBay 148%, and Amazon almost 80%. Then Alibaba only 7.54%. Don't get me wrong, a 7 to 8% return on a yearly basis is good, but not the best one. Even the S&P 500 is up way more than that. The S&P 500 averages 10.7% a year, so it's more than what Alibaba is up to right now. I do have to say that I like Alibaba. I know it is very, very cheap at current prices, but if anyone here decides to invest in it, I think they need to have a long-term mentality and not a short to mid-term mentality because the stock gets affected easily by any Chinese news, which is why the stock is only up 20% in the last 2 months. That is what you need to think about when investing in this company. Not financial advice, just my way of thinking and my opinion in this company. Hope you enjoyed the video. Please smash that like button and subscribe since it really helps the channel out. Remember about the completely free Discord group chat, which the link for that is down in the description below if you would like to join and talk with us about any investment. Thank you and see you next time.